Recent volatility is fueling a debate on whether investors should stick with the cyclical trade or start getting more defensive with their portfolio. Just where's the best place to put your money? Todd, we've been debating this all year. Recently, defensive names, your consumer staples, have been holding up well. But if we get any resolution to the trade issue, defensive names are going to do better. Where do you stand on this?
So we at CFRA like this new ETF that came out from Direxion. It's a cyclical over defensive ETF, RWCD. It favors the cyclical side, so the technology, the financials, the consumer discretionary. It's long that, and it's short the defensive ones like utilities and consumer staples. We do think that the economic growth picture is going to improve. Earnings picture is going to be quite strong, and this is a compelling way of getting exposure to that in one ETF as opposed to building it yourself.
And I misspoke a moment ago. I meant cyclical should be better over defensive. Tom, what about some of these new ETFs? This one Todd is mentioning here, the RWCD, I think is the symbol there. Cyclicals over defensive. So 1.5 times long some of the cyclical names. So you own Amazon and Microsoft and things like that, and you're short partly the defensive names like consumer staples names. Is there a future for this kind of ETF? I like the idea. At least you make it a clear bet.
You are, and Direxion's done a great job of putting the suite together. They have 14, so you can actually go growth or value, or you can go domestic or international. Again, as you point out, 150% long. And then on the short side, it's 50%. So you're a net 100% long, kind of creative in that strategy.
Yeah, and you can't, I mean, look, it's a bet. At least it's a pure play bet of some kind, Todd. That's what I like about it. It's hard to say, well, against the S&P, you know, because it's going to go up and down depending on the circumstances. But if you have conviction, I like the way it's set up.
Yeah, a way of making sure that you're targeting your exposure. So you'll find that growth-oriented ETFs are a way people tend to play cyclical. But within growth-oriented ETFs, you're going to have a variety of sectors, but you're also not going to have financials in Vanguard Growth ETF. Or you could play the defensive side of it with utilities or dividend-oriented stocks. But again, you're going to have a mix of it. This allows you to be more targeted. And Direxion is one of the firms that stood out. We've seen a number of the larger firms stay on the sidelines in launching new products in 2019.
There's no shortage of new products, and not just things like making bets, but even individual concepts. So recently, iShares launched a self-driving ETF device. IDRV is the symbol. So you own Google, you own the autos. I don't know why you don't own Tesla in a big way, particularly, but the problem I have with this is how much of a revenue of self-driving is there really in owning Alphabet or any of the automobiles? You can't really. There's nothing there to grab onto. It was like getting involved in cryptocurrencies 3 or 4 years ago. There's nothing really to buy.
This is one of these things where ETFs are hugely popular. Most advisors say they're going to be their go-to investment. Thematic ETFs continue to be really, really strong. However, as you point out, you have to look under the hood and make sure that the bottom line of those companies affect the overall objective of the ETF. In this case, it's clearly not the case.
Yeah, do you have the same feeling? I'm all in favor of more research on self-driving cars. I'm more in favor of companies that are doing it. I just don't see a lot to buy, and I certainly don't see how, owning a chip stock is going to make it, a big dent in you owning self-driving cars. It's not going to. It doesn't help. These
are some of these longer-term themes that you have to get in early with some of these companies. But you, as Tom mentioned, you do really need to look under the hood, make sure you understand what is inside the portfolio.